Welcome to the deep dive. We're jumping straight into something pretty fundamental to, well, everyone's lives, really.
Yeah.
Finance. More specifically, we're looking at trust in banking, how it's changing, with everything going digital. And there's this idea, digital experience branding, that's being talked about as key to keeping or rebuilding that trust. Our focus today is digging into one specific source on this, an article called Restoring Trust in Banking, Unpacking Digital Experience Branding, which comes from UXDA. So our mission here is to really unpack this source, pull out the crucial insights, and figure out what it all means for you and how you interact with financial services today. Probably on your phone, right?
Absolutely. And it's so important because trust, well, it's always been the foundation, the absolute bedrock of finance. Think way back, ancient merchants, they had to completely rely on trusted agent. That basic need for faith hasn't really changed, even with today's complex tech. If anything, trust might be even more critical now. It drives everything.
Okay, so the source starts by looking back. Trust used to be built, face to face, that warm handshake feeling.
Exactly. That personal connection was everything. You knew the banker. But then came digitalization, online, apps. A lot of that disappeared. The focus shifted naturally to convenience, letting you do things yourself, which people do want.
Yeah, convenience is huge.
But something was lost, that direct personal link.
So the big question then is, with all this digital stuff, is trust maybe, less important now?
No, not at all. The data in the source is really clear on this. Customers are actually more demanding now. They expect transparency, honesty. There's a stat from the Financial Brand 2024, I think.
Oh, yeah?
Yeah, 61% of consumers said trustworthy information was the most crucial thing for them. Transparency, it's non-negotiable.
Wow, 61%.
Okay.
And what happens if that trust breaks online? The source mentions something called silent departure.
Precisely. People just leave quietly. They don't call up and complain usually.
They just switch banks.
Yep. And that's a massive problem for banks because the old feedback methods like surveys, they don't really catch this. You need newer ways to listen, like monitoring social media, analyzing transaction data. You need real-time insights before they just vanish.
Okay, let's pivot to innovation. There's so much happening. AI, cloud, embedded banking, cybersecurity stuff, open banking, blockchain, crypto, reg tech, ESG, customer tech. It's a lot.
It's an absolute whirlwind of innovation. And banks need this stuff to compete.
Yeah.
But here's the paradox the source points out. All this crucial innovation, it can actually damage trust if it's not handled right.
Wait, how does new tech hurt trust? Seems backwards.
Well, the source highlights two main ways. First, it can mess up brand consistency. Things look or work differently across platforms. And second, maybe even bigger, just a plain bad digital experience. If the tech is clunky or confusing, trust drops.
Okay, here's where it gets really interesting. Tell me about the data linking that bad digital experience directly to losing trust.
Right, so there's this MX Research survey about 1,000 U.S. consumers. Really revealing, get this, 68% said they'd rather have a simple, easy digital experience than deal with friendly staff. Ease beats warmth for most people online.
68%, that's huge.
And they act on it. 34% had already switched banks for a better digital experience. Another 22% said they would switch if it were easy.
Wow.
But here's the direct trust link. 1 in 5, 20% lost trust because of a bad digital banking experience. 1 in 5. Plus that frustration factor. 1 in 3 people get annoyed with their mobile banking every month. Some even stopped using the app completely.
1 in 5 losing trust just because the app is bad. It's powerful. Is there a specific example from the source?
Yeah, the article mentions inconsistency as a key culprit. It brings up Bank of America, where users apparently found it easy to add an account on the website.
Okay.
But then found it difficult or even impossible to do the exact same thing in the mobile app.
Ah, I see.
That kind of mismatch isn't just annoying. It makes the bank look unreliable, disorganized. Kind of makes you wonder, It chips away at trust.
Yeah, inconsistency breeds doubt. Okay. The source also mentioned another factor. People being wary of these new technologies themselves, especially with sensitive data involved.
Absolutely. Things like AI, blockchain.
Yeah.
They can sound complex, maybe even scary to some people. If a bank just throws this tech out there without clearly explaining how it works, how it helps you, and crucially, how it protects your data, people get skeptical.
Understandably.
Yeah. They worry about security, privacy, maybe losing that human touch, lack of clarity there.
Yeah.
Directly hits trust.
Let's talk more about AI specifically then.
Yeah.
Huge buzzword. Benefits versus the trust concerns.
All right. So the potential benefits are definitely there. AI can personalize your experience, maybe offer budgeting tips based on your spending, streamline customer service chats, even spot savings for you.
Sounds useful.
It can be, but then you have the other side of the coin. AI needs data, lots of it, which immediately brings up privacy worries and the fear that maybe human interaction gets pushed aside. The source calls it the personalization paradox.
Naming.
We want services tailored perfectly to us, but we're hesitant, often rightly so, about sharing the very data needed to make them tailored.
How much it?
And trust is the bridge there. The article cites a PwC report from 2024. 92% of South African consumers said data protection is critical for earning their trust. 92%. So if banks are crystal clear about AI use, the benefits to you, and their security measures, people are much more likely to come along.
Okay, moving beyond specific tech like AI, what about the whole process of digital transformation itself? Improving the user experience, streamlining things. What happens if that process goes wrong?
Well, according to the source, if it's done poorly, you end up with a fragmented brand experience. It feels disjointed. And that directly damages trust. You get confusing interfaces, inconsistent navigation. It's frustrating. It makes it hard to do what you need to do.
And that makes people leave.
Exactly. That inconsistency erodes loyalty. Why stick with a bank whose online presence feels unreliable or confusing when you can switch to one that feels smooth and predictable?
So what causes this inconsistency? Let's unpack that a bit. What did the source say?
Several key things. A big one is just internal communication breakdown.
Silos.
Yep. Different teams, app team, website team, service team not talking, not aligned, leads to a messy experience for you. Another one, chasing trends. Adding features just because they're new, without really checking if customers need them or how they fit the brand. Remember that stat? A 2019 report found 80% of digital product features go unused. 80%. That's wasted effort and adds confusing clutter.
Wow. Okay.
Also, rolling out new stuff too fast, without clear guidance, or if it doesn't obviously connect back to the bank's main mission or values, that confuses people.
On the visual side.
Huge. Inconsistent visuals, different logos, colors, design styles across platforms. That Markham Agency survey from 2022 found 7 out of 10 people under 55 would switch banks for a better experience. Visual consistency is a big part of that feeling of better. And finally, it often comes down to a weak internal brand identity. If the employees don't really get the brand, they can't deliver it consistently online or anywhere else.
Okay, so given all these pitfalls, losing the handshake, tech eroding trust, bad transformations, how do banks actually balance innovation with building trust? What are the strategies?
The source lays out a few key strategies. First, they need a unified brand vision, clear guidelines on mission, values, look, feel, tone of voice, and communicate it internally through brand workshops. Everyone needs to be singing from the same hymn sheet.
Makes sense.
Second, cross-department collaboration is essential. Tech, marketing, service, everyone needs to be talking constantly, using shared platforms, making sure every innovation fits the big picture.
Right. Break down those silos we mentioned.
Exactly. Third, really prioritize customer-centric design. That means actually involving customers. A/B testing, surveys, focus groups, watching people try to use prototypes. Find the pain points, build what you find intuitive.
Okay.
Fourth, security and compliance need to be rock solid, and they need to talk about it. Strong encryption, regular audits, following rules like GDPR, that's table stakes, but they also need to clearly tell customers how they're being protected. Transparency builds confidence. And finally, actively balancing innovation with that brand consistency. Does this new tech fit our brand promise? Does it make the experience better or just different? Prioritize quality, test thoroughly, keep the look, feel, and messaging consistent everywhere you interact with them.
It really sounds like design is way more than just making things look pretty. How does that customer-centered design actively build trust?
Oh, absolutely. The source really hammers this home. Attractive design helps. Sure, there's psychology research showing that. But trust in digital finance, it's built on the experience. Is it smooth, intuitive? Does it make sense? Do you feel in control, secure? That's what matters. That EPAM research from 2020 found 63% chose their main bank primarily based on trust. And the source lists all the things shaping that trust: brand identity, values, online reputation, how they communicate, speed, support, social media.
So the design has to reflect all of that.
Exactly. The digital design and UX have to align perfectly with all those elements. It's about the entire digital experience fulfilling the brand's promise and meeting your needs.
And brand identity itself. How crucial is that feeling, that identity in the digital space?
It's vital for creating an emotional connection, especially in finance. With your money and data on the line, it's more than logos and colors. It's the feeling of reliability ethics. That Deloitte study from 2019, 77% of customers value honesty, especially about data. A consistent, authentic brand identity signals credibility. It reassures you they're acting with integrity.
How does that translate to their online reputation, their digital reflection, as the source called it?
Well, people check reviews, right?
Yeah.
That review tracker's finding 55% look at reviews when choosing a financial provider shows how important it is. Banks need to actively manage that online presence, respond to feedback, show positive stories. It demonstrates openness and builds trust.
And consistency again.
Across everything, the app, website, emails, chatbots, it all has to feel like the same trusted brand. McKinsey's study back in 2014 made a powerful point. Consistency across the whole journey is 30% more important than any single interaction.
30%.
Yeah. If the digital bits don't match the overall brand promise, it just creates doubt.
So how does the design of, say, the app connect back to the bank's big picture strategy and what you, the customer, actually need?
The design should be a deliberate reflection of their strategy. Are they positioning themselves as innovative, super customer-focused, ultra-secure? The design needs to communicate that instantly. And the only way to make sure it meets your needs is through feedback and data. McKinsey's point, highlighted in the source, is about using granular data, your online behavior, where you transact to build detailed profiles and journey maps.
Oh, yeah?
This lets them take complex financial stuff and simplify it into designs that are genuinely user-friendly, reflect the brand strategy, and make sense in your life.
Okay, let's unpack this further. The source lists specific components, the building blocks of this digital brand identity for finance. What are the key elements we need to think about?
Right. The article breaks it down into 12 core areas. They all need to work together. We can kind of group them. First, the foundations. Visual identity. That's the logo, colors, fonts. Needs to be distinctive, consistent everywhere. And verbal identity. The tone of voice friendly, formal. The messaging needs to be clear, consistent. Even the microcopy, those tiny bits of text on buttons or alerts, needs to fit the brand and be helpful. Clear communication, simplifying jargon is key here.
Visual and verbal. Got it.
Then, the actual user experience and interface, how it works, needs to be intuitive, easy to navigate. Accessibility is crucial, works for everyone, must be responsive, perfect on phones, tablets, and, you guessed it, consistency in look and feel across all platforms.
Makes sense. What's next?
Trust and security, super important. Visible security features SSL, talking about encryption, multi-factor authentication, MFA, clear signs of regulatory compliance like GDPR badges, easy-to-find privacy policies, and visual trust signals like security icons or certificates.
Okay, security front and center.
Then, personalization and data, using analytics for tailored experiences, having feedback loops to collect and act on your input, doing user testing, and using analytics to improve the design. This often involves using customer data platforms effectively behind the scenes.
Using data wisely.
Right. Then think about the digital touchpoints where you actually interact. The website and app design needs to be top-notch. An active, engaging social media presence. Responsive customer support across channels, maybe using AI chats effectively. And targeted messaging like relevant push notifications.
Okay, covering all the places people connect.
Exactly. And then there are the ongoing efforts, content and engagement, providing useful articles, maybe interactive tools, building a community, innovation and emerging tech, smartly embracing things like AI or blockchain, continuously improving based on tech and feedback, ensuring designs are scalable. Also, marketing and brand reach using data for targeted ads, strong search engine presence, SOSM, effective email marketing, reputation management monitoring sentiment, being transparent in crises, showcasing testimonials, omni-channel integration, making sure the experience is seamless if you switch channels like app to phone call. And finally, innovation and agility, adapting quickly, collaborating internally, involving customers in development, and using fast prototyping.
Wow, okay, that is comprehensive. It really drives home the point that just having a decent app, good UX, isn't enough, is it? What's the bigger picture here with digital experience branding?
Exactly. That's the core argument in the source. UX design, absolutely vital, but it's not the end game. The real goal is building that strong, unified financial brand identity across every digital touchpoint.
So it's broader than just the app itself.
It's much broader. It's shifting focus from just the platform experience to the overall brand experience. How does the brand feel to you in total? It means a cohesive approach integrating design with marketing, service, social media, not just delivering features in isolation. And fundamentally, it's about long-term relationships, not just one-off interactions.
Right.
And the source circles back to needing that deep user research specifically for finance, because it is complex. Using detailed data to map your journey, simplify things, make it intuitive. This strategic thinking is where a digital experience branding framework comes in, like the one UXDA pictures. It explicitly links design strategy to business goals.
And there are real benefits to that strategic approach.
Definitely. The source mentions an Envision study finding that brands integrating design strategically see cost savings, more revenue, higher brand value, better market position. It's different from just lean design focused only on function.
Okay, so let's bring it all together. Why is this concept, this digital experience branding, so critical right now?
Well, the source points to a few key drivers. First, evolving customer expectations. We're all used to slick digital experiences everywhere else, right? We expect the same from our banks. Fintechs really raised that bar.
Sure.
Second, rising competition. Those digital-first fintechs are winning customers, partly because their experience is so smooth. Traditional banks need strong digital branding just to compete effectively. And third, it comes back to building trust in the digital age. Without the handshake, trust has to be earned online. Through secure platforms, clear communication, and those consistent, reliable experiences we've been talking about.
It really frames it as an urgent need. So what's the payoff? If a bank gets this right, what are the benefits for them and ultimately for you as the customer?
The source lists 10 key benefits, and they really do connect back to a better experience for you. 1, building trust and credibility. A solid digital brand feels reliable, makes you more confident giving them your money.
Okay, foundational.
2, differentiation. Helps them stand out, shows you what makes them unique. 3, customer loyalty and retention. Creates that emotional connection. Makes you less likely to switch just for a slightly better rate.
Stickiness.
4, enhanced perceived value. A trusted brand feels like better quality, you might feel it's worth it. 5, efficient marketing. Clear brand messages you understand and remember easily.
Right.
6, attracting talent. Good employees want to work for strong brands. That could mean better service for you. 7, facilitating growth. Makes it easier for them to offer you new, useful products. 8, resilience in crisis. Trust provides a buffer if things go wrong. Stability for them and you.
Important.
9, increased customer acquisition. Happy customers like you recommend them. Word of mouth is powerful. 10, innovation and adaptability. They value your feedback, leading to continuous improvement and better services over time.
That's a compelling list of benefits, and the urgency seems real. The source mentioned that on FIDO's stat from 2024, 80% prefer a fully digital banking experience. Adaptation isn't really optional.
Not at all. And it's ongoing. It's about constantly evolving the brand identity across every digital touchpoint, logos, visuals, language, interactions. That consistency online is paramount because, for many, it is the bank now.
Yeah, the source had that example of a big global bank rebranding specifically for digital scalable logo, new visual language, shifted marketing, and it worked. Engagement and acquisition went up.
Exactly. It shows this isn't just about keeping up. It's about setting the standard, creating genuinely memorable experiences that build that loyalty.
But it sounds complex to pull off this transformation.
Oh, it absolutely is. It takes deep industry knowledge, understanding human behavior, careful planning, loads of collaboration. The source does mention the role of strategic partners like UXDA itself, who specialize in this financial UX digital branding. They bring that focused expertise to align the digital experience with the core values and goals. You know, their stats, 10 years just in finance, 37 countries, 150 plus products, 70 plus financial brands, that highlights the kind of dedicated experience needed to get it right for you.
So wrapping this up, the core message seems clear. Trust is everything in finance. And now that trust has to be designed intentionally into every single digital interaction.
That's the heart of it. It's about weaving brand identity together with truly user-centered design. That's how you bridge tech and the human element online. Transparency, consistency, they're not optional extras. They're fundamental. And keeping your needs and feelings front and center is the only path to building real relationships digitally.
So embracing digital experience branding isn't just a good idea. It's really a strategic must-do for financial brands now. It's how they'll redefine trust online, stand out, and actually connect with customers like you when there's no handshake. And here's something final for you to think about based on all this. As your financial life becomes almost entirely digital, how will you judge if an institution is trustworthy? When that warm handshake is gone, what specific things in their app, on their website, in their emails, what digital signals tell you, yes, I can rely on them?